Welcome to Talk Tickers. We're your shortcut for understanding key earnings calls. Today, we're jumping into PG&E Corporation's first quarter of 2025. We'll break down the financials, the strategy, the outlook, give you the essentials.
All right, so kicking off with the results, Q1 core earnings per share came in at 33 cents.
33 cents. How does that stack up?
Well, it's actually down slightly 4 cents compared to last year.
Okay. Any reason why?
Yeah, they pointed mainly to a lower return on equity. That's, how well they're using shareholder money, and also some equity dilution.
Oh, right. From that stock issuance they did back in December, wasn't it?
Exactly. It means each share is a slightly smaller slice of the pie.
Got it. So a bit of a dip in Q1, but what about the outlook for the whole year? Are they worried?
Doesn't seem like it. They actually reaffirmed their full-year guidance for core EPS, still looking at $1.48 to $1.52.
Okay, and what does that mean compared to last year?
Well, the midpoint of that range, $1.50, represents a 10% jump from 2024. So they're clearly expecting a stronger performance through the rest of the year.
A 10% increase? Okay, that's pretty solid. And are they talking longer term too?
They are. They reiterated their core EPS growth target of at least 9% annually.
At least 9%.
Yeah, for 2026 all the way through 2028. That kind of sustained growth is definitely what investors look for.
Okay, let's get into the meat of it then. Big investments, data centers. Sounds like a lot is happening under the hood.
Definitely. Their big capital plan, the $63 billion one through 2028, is apparently right on track.
And funded.
Fully funded, they say, by that December equity raise we mentioned. But what's interesting is management now sees potential for another $5 billion at least in investment needs on top of that.
Whoa, another $5 billion. That's a lot. How do they plan to pay for all this without hitting customers too hard?
Yeah, affordability is a major theme. They're talking about prioritizing projects with what they call beneficial load growth, think data centers again, or maybe stretching out the rate increases over a longer time frame.
Makes sense. And the overall financing plan?
That 5-year plan is unchanged. The big goals are still hitting investment grade credit ratings and funding all this necessary work for customers.
Any tweaks to the near-term debt plans?
Just a minor one for 2025. They reduced the long-term debt guidance by about $500 million. Seems they extended a term loan.
And dividends. Still planning to increase those.
The target remains 20% payout by 2028. So that leaves a lot of earnings kept back to help fund these big investments.
Right. And importantly,
yeah, this current plan doesn't even bake in potential savings from, say, a Department of Energy loan guarantee or the financial benefits if they actually hit that investment grade rating. So potential upside there.
Okay, let's talk data centers. This sounds like it could be huge. What's the latest?
It's pretty striking, actually. The project pipeline they're tracking has jumped massively. It was 5.5 gigawatts at year end.
And now?
Now it's up to 8.7 gigawatts. That's a huge increase in just a few months.
Wow. Are these just ideas or are projects actually moving forward?
Well, they have 1.4 gigawatts across 18 projects that are in final engineering stages right now.
And what's driving this demand? AI?
Primarily, yes. They mentioned it's mostly for inference model data centers, which are key for running AI applications.
Okay, this is the fascinating part. How does this massive new demand affect, regular folks' bills?
Right. You'd think more demand means higher costs, but PG&E estimates that each gigawatt of new data center load could actually save existing customers about 1% to 2% on their bills.
Save money? How does that work?
Basically, the new large users help spread the fixed costs of the grid over more sales. Plus, the infrastructure investments needed for them might have broader system benefits.
Interesting. When might we see these data centers come online?
They expect about 90% of that 1.4 gigawatts in final engineering to be actually built by 2030. The big transmission upgrades needed will be filed separately with FERC, the federal regulator.
And there might be even more beyond this.
Could be. They mentioned another multi-gigawatt cluster study is already underway. So the potential growth here is really significant.
Okay, so huge potential growth from data centers, possibly lowering bills long term. But what about bills now? Affordability is always a concern.
Absolutely. And they did make a point of saying that average bills are actually down in 2025 compared to 2024.
Down this year. Okay.
And they're forecasting further decreases for 2026. Plus, their big general rate case, the GRC filing coming up on May 15th.
That covers rates for 2027 to 2030. Right.
Exactly. They're anticipating it will be their lowest rate request in a decade.
Lowest in a decade. Why?
Efficiency gains. mostly.
Right.
And also having these big capital projects ready to go. But again, that GRC filing won't include savings from things like that potential DOE loan or the beneficial load growth we just talked about.
So they've been finding ways to save internally.
Seems like it. They highlighted over $500 million in O&M savings in 2023 and nearly $350 million in 2024. Those savings will be reflected in the GRC.
Any other affordability initiatives?
Yeah, they got CPUC approval. That's the state regulator for a non-wildfire self-insurance program. If there aren't major claims, it could save customers over $600 million through 2030.
Okay. Let's shift to wildfire safety. Always critical for PG&E. How are things looking there?
On the safety front, they hit a milestone. 814 days without a fatality. They said that's the longest run in over 25 years.
That's definitely positive news. And the mitigation efforts.
Their plan for 2026 to 2028 was filed back in March. It focuses on the key areas: vegetation management, making the system tougher, more resilient, and preventing equipment failures.
And undergrounding. Putting lines underground in risky areas.
That continues. They project the first 1,230 miles will eventually yield about $465 million in O&M savings and over $280 million in saved vegetation management costs over the current GRC cycle.
So safety improvements that also save money long term.
That's the idea. And related to wildfires, they're also hoping for a constructive outcome this year on improvements to the AB Bonetivo wildfire policy.
Why is that important?
They see it as key to rebuilding investor confidence and making sure they can borrow money affordably for all these upgrades.
Okay, regulatory stuff. What are the key dates or filings we should watch for?
Well, the 2026 cost of capital application is in. They're asking for an 11.3% ROE. We should get a decision by year end, effective January 1st, 2026.
Then the big one.
The big one is that 2027-2030 general rate case proposal, due May 15th, that'll lay out the spending and rate plans for 4 years.
Anything else?
They also plan to file their 10-year undergrounding proposal with the safety regulator before the end of this year.
And financially, there was some good news on their credit rating recently.
Yes, big news in March. Moody's upgraded the utilities credit rating to investment grade by 3.
That's a major step, right?
Huge step. It lowers borrowing costs. Now the focus is getting the parent holding company, PG&E Corporation, up to investment grade as well.
Okay, let's zoom out. If you're trying to understand the PG&E story right now, what are the key takeaways from this quarter?
Well, first, that small Q1 EPS dip seems like it was expected, given they held the full-year guidance steady and are projecting that 10% growth. Management seems confident.
And the data centers.
That's the really eye-popping part. The sheer scale of that potential growth is substantial. And the idea that it could actually lower bills for existing customers, that's a really interesting dynamic for investors focused on growth, but also, ESG factors.
It's quite a balancing act, isn't it? Massive investment, but trying to keep rates in check.
Exactly. Committing to keep rate increases at or maybe even below inflation, around 2 to 4%, while spending billions. It really highlights their focus on efficiency. If they pull it off, it suggests potential for strong, sustainable returns.
And the risks. Wildfires.
Progress on wildfire safety and getting a good outcome on AB 10054 are definitely key to de-risking the story. That Moody's upgrade is tangible proof they're moving in the right direction.
So the upcoming GRC filing on May 15th sounds like the next big thing to watch.
Absolutely. That will give us the detailed roadmap for the next 4 years and show how these efficiency savings are playing out in their plans.
All right. Time for our This Is Not Financial Advice's segment. Based on all this, got any outrageous but plausible trade ideas?
Okay, here's one, playing off that data center boom. Given the massive power needs and, just as importantly, the cooling needs of these new facilities.
Right, they generate a ton of heat.
Exactly. So an idea could be to look long at companies specializing in advanced, large-scale data center cooling solutions, particularly those with a strong presence or contracts in Northern California. They'd be an indirect beneficiary of PG&E needing to supply all that power.
Interesting angle, but you'd need to watch.
Oh yeah, you'd need to watch the specific tech, the competition, actual contract wins. Regulatory hurdles for the data centers themselves could also slow things down. Plausible, but definitely needs homework.
Okay, one more. Outrageous but plausible trade idea number 2.
How about this? PG&E is pushing hard for investment grade at the parent company level, right? And they keep mentioning potential savings from things like a DOE loan that aren't in the base plan yet.
Yeah, potential upside not priced in, maybe?
So maybe a pairs trade? You go long PG&E bonds, maybe maturing around 2030, betting that further credit upgrades will happen as they de-risk, which would push bond prices up and yields down.
And short.
And short the bonds of a comparable utility that maybe doesn't have such clear catalysts for financial improvement, maybe faces more regulatory uncertainty or wildfire risk without the same mitigation progress.
So betting on PG&E's specific improvement story relative to a peer.
Exactly. But it hinges completely on them executing, getting that AB 254 resolution, continuing the financial discipline. High risk, needs careful analysis. Outrageous, but plausible.
Fascinating stuff. So that wraps up our deep dive into PG&E's first quarter call. We hit the financials, the really significant data center growth, their efforts on safety and keeping bills manageable, and the regulatory path ahead. This whole narrative of huge investment, potentially leading to lower bills via data centers, that's definitely one to watch.
It really is. A lot of moving parts.
What do you think is the single most critical factor for PG&E going forward? Something for you, the listener, to mull over. As always, do your own research, consider how this fits your strategy.
And remember, nothing we've discussed today constitutes financial advice.
Join us next time on Talk Tickers for another earnings call breakdown.